Alright guys, so today we are going to be learning what a supply and demand zone is, how to identify one, how to draw one, and we'll lightly touch on how to use it so it can supplement your trading. This is going to be a two-part series because it's a lot to go through in one sitting. So on the second video we'll go ahead and see how you trade them. I'll go over questions you guys had, and also I'll provide more in-depth examples to show you how you can be a little bit more flexible with these things. So let's just go ahead and get started with trying to define what a supply or demand zone is. So basically, supply and demand zones are regions in a chart where they often come to fruition after there's a large period of accumulation followed by a rally to either the upside or the downside. So what happens is that these regions are basically areas where there are a bunch of unfilled limit orders that are oftentimes placed by institutional buyers, think banks, hedge funds, or people with a lot of money. And those areas, since they do have unfilled limit orders just waiting to get triggered by price, once price goes back and touches those regions again, oftentimes those unfilled orders will get triggered and it'll push price in the opposite direction, thereby driving price up or down, and that's basically how the stock market moves. So we'll go ahead and get started on first how to identify where there's a potential demand or supply zone. So let me just pull this up to help you guys visualize. So I'm going to go ahead and talk about a basing candle first, because this is one of the most important key things when identifying these zones. So basically, in order to get supply and demand, there are four types of formations that usually lead to these zone formations. So the first, we'll just go ahead and focus on demand. So the way you're going to get a demand zone is usually going to be when price is moving in an upward direction in a rally, followed by a consolidation period, which is just sideways action, followed by another rally. So basically this area right here is going to be demand, and that's only going to be after the fact that this happens. Another way to determine where demand is or where demand forms is by having a drop, a basing period where consolidation occurs, and then another rally, and then a rally to the upside. So basically, if price ever reaches these areas again in the future, price is most likely going to jump in the other direction. And we'll just go ahead and, I'll just go over this very lightly right now, but just know that these two formations are generally what lead to demand zones. I'll go ahead and discuss these in further detail in the next video, but let's just go ahead and go to supply now, because we're basically just trying to learn how to identify them and how to draw them at the moment. For supply, you can get supply by basically having the mirror image of this. So you're going to have a drop followed by a basing period, consolidation, sideways action, followed by another drop. So when price hits, if it ever gets to this level again, if price goes near it, these orders are going to get filled and go in the opposite direction most of the times. And then also another way to get supply is by having a rally to the upside, a basing period, consolidation, sideways action, and then followed by a drop. And again, once price, if it ever reaches that level again, it's very likely that these orders are going to get triggered and they're going to push price to the opposite direction, okay? So these are the four formations that usually lead to these zones. So this is a rally followed by a basing period, followed by another rally, a drop, a base, a rally, a drop, a base, a drop, and a rally, base, drop, okay? So we'll keep these shapes in mind as we go and examine some charts. Also, another thing, I'm sorry, I skipped over this. One of the most important things, aside from this, is identifying basing candles. So, like in these formations, we saw that these zones are a result of these basing periods after price action. So during these basing periods, oftentimes you're just going to have candles just move sideways. They're not going to be big, or they may be sometimes. They may have large wicks, they may have small wicks, but price is really not doing much in these regions. They're just moving sideways for the most part, and it's only until you get to a critical point here, or here, here, or here, that price makes a sudden move up or down, and that's where you want to look for these supply and demand zones. That's usually where you find the formation of them, and that's usually where you can identify the candles that comprise the zones. So basically, at these critical points right here, oftentimes you're going to find a small basing candle. It's the basing candles that I usually look for are small, and they are either followed by, this is demand, for example, they are followed by a large candle to the upside, and this would be demand. Or for supply, you have a small basing candle followed by a large candle to the downside. And we'll go ahead and go into further detail as to like what types of different candles, like, because there you will come across many different candles that form before a big rally to the upside or downside, and we'll go ahead and see which ones are good, which ones are bad, and where you can actually determine whether you can use it for your zone or not, and also what makes a good candle or a bad candle. So now that we know that we need a basing candle before a big rally to the upside or downside, the way I usually like to draw these is simply by, like, for example, for demand, what I usually like to do is I like to take, this is oftentimes going to be, every single time, this is going to be a red candle, and this is going to be a green candle, okay? And in this case, for demand. For supply, this basing candle is always going to be a green candle, followed by a big red candle. And normally the way I like to draw these things, my zones, I usually like to take the open of the red candle. That would be the start of my zone. And then the lowest point on either of these candles. Oftentimes these are going to have wicks to the downside, and whichever wick is longer on these candles, let's just say for this sake, the red candle is bigger than the red candle's wick is bigger than the green candle's, I will use this wick as the end of my zone. So basically this will be the start of my demand zone. Let's just say this is $5, and then the end of the demand zone will be $4.50. Let's just say this just to help you guys visualize. Same thing for supply. What I like to do is, again, doesn't matter whether it's a red or green candle, I usually like to draw it from the, I like to draw my zone from the open. So for this green candle, it's going to open here. This is going to be the start of my supply zone. And then let's just say this red candle's wick is higher than the green one's. I will use that as the end of my supply zone. Okay, and let's just say this is $3 and this is $3.50. Okay, 1 second, sorry guys. Okay, so that's basically how you're going to draw these zones. So for demand, you're going to have a red basing candle followed by a green rallying candle. And you're going to, I usually like to start my zone at the open of that red candle, and then I like to end that zone at the lowest point of either one of these candles' wicks. Same thing for supply. I like to draw the start of my zone at the open of the green candle, the green basing candle, before the big move to the downside. And then I like to draw the end of my zone at the highest wick. It doesn't matter which of these candles basically you're just going to want to determine which of these candles' wicks is the highest point, and I will use that as the end of my zone. And I'll go into further detail on my next video explaining as to why that is. But for now, this is all you just need to know. Oops. 1 second, guys. What happened here? Oh, that's weird. Give me 1 second. Yeah. Okay. So, I'm sorry. So, just quickly, once again. For demand, you're going to have a red basing candle followed by a big green rallying candle. And for supply, you're going to have a green basing candle followed by a large red candle to the downside. And again, I like to start my zones at the open of the red candle for demand, and then I like to end the zone at the lowest point of the wick for whichever candle has the lowest wick. I'll use that as the end. Same thing for my supply. I like to start it at the opening of the green basing candle, which will usually be followed by a big red candle, and I like to draw the end of that zone at the highest point. Doesn't matter which one of these has the higher wick. I will basically just use the highest point between these two candles. Okay. So now let's go ahead and look at a chart. So this is NVIDIA right here. So right here I have several zones already charted out. Like you'll see on my charts, you'll see 1 day is 3 hours, 90 minutes, 4 hours, 1 hour, 4 hours. And that is just basically me. The way I like to do it is I usually like to start off from the largest time frame that I usually can. For I've never really used monthly candles since I mostly day trade and I've barely gotten into swinging. At the very most, I'll use weeklies, I'll use dailies, but oftentimes the ones that I find the most consistency in are 4, 3, 2, 90 minutes, and 1 hour time zones. So we'll just go ahead and start off with with the largest, because you should be working your way from the largest time frame, whatever you're comfortable with. I would recommend 1 hour, or I'm sorry, 1 day, and then work your way down to a 1 hour. You can have different time periods as opposed to me, but oftentimes, if you just keep it simple, it's much easier, it's much faster. So let's just go ahead and get started with the 1 day. Let's see. Okay, so I have a 1 day over here. So right here we have this little basing candle, this red candle followed by a candle to the upside. This is actually probably not that good of an example because these are individual days. But the thing that I do not like about it, that I've had some questionable trades on in the past, are when you have a basing candle followed by a gap up. So I'll go ahead and go into detail into this on the second video. Let's try another one. Let's go into the 4, because I do see some 4s in here. So like I showed you guys in those little diagrams on that notepad, oftentimes what you are looking for is a small basing candle followed by a big rally to the downside or the upside, in order to determine where there's going to be a zone. So for simplicity's sake, let's just look here. So right here, I'm on the 4-hour time frame, and I'm noticing that Nvidia recently had a big rally to the downside. Right here, if I were to try and identify supply, I would just go through this data right here, all these candles right here, and then see where I can find a basing candle before a big rally. And luckily for us, on the 4-hour, there's already one right here. So what I went ahead and did is I took the opening of this green candle, which was what, 377, and then I used, so that was the start of that supply zone, and then right here, this is basically the price where that supply zone ends for me. And I'll go ahead and go into further explanation as to why I have a calls above note here at the end of the supply zone. But basically, you identify a basing candle followed by a big move to the upside or the downside. You draw, I usually like to draw the start from the open of that green candle and then the end to the highest point of either one of these candles. In this case, it's the red candles. Okay, I think there was one more. Let's see. Yeah, so there's this one right here. So right here, I used this candle for this 4-hour zone, this 4-hour supply zone, and this candle opened at 320.7. That's what I have it at here. And then since this candle is followed by a large rally to the downside, I will, let's see right here, what would this be? The end of this zone would be the high of this, which would be 324.49. And I'll also, let me just touch on this right now. Sometimes you don't necessarily need a big candle to the downside or the upside to determine, or actually to draw out a supply or demand zone. As long as you have action that is big to the downside, whether it's in one candle or multiple candles like it is right here, I would still consider that a valid supply zone or demand zone. As long as there's movement, rapid movement to one direction, I will still consider that a supply and demand zone. It doesn't necessarily need to be a big candle like this one. Ideally, these zones are, if it's a big like in my experience, if it's a big candle like this, it is oftentimes a lot more, there's a lot more conviction when you have a formation like this than something like this. But these are still valid because there is still big move to the downside. It probably happened over a larger period of time than say this one, but this is still valid. Okay, guys, and I'll show you some examples later of how that I can make that claim. So now I'm going to go to the 3-hour like I just did, and I believe, where the heck is it? Oh, right here. So right here. So right here, I'm just basically looking for, when I do this, I'm looking for either, I usually like to work my way up from demand to supply, but in this case, we're just going to do both at the same time in tandem. So right here, you have a nice basing candle, small body followed by a big green candle, and right here, the open is the start of this 3-hour zone, 283.75, and then again, I like to choose the lowest point between these two candles. So since this green candle doesn't have a wick, I automatically go to this red one, and that's where the end of my zone would be. Okay, and this one's actually a really nice one because I forget when I drew this. It probably had to be like around this time because I usually, wherever I start the line, that's usually the day that I draw them on. So this was probably drawn on 1222, 1223, around that time. And basically, price just moves up, and I'll show you this too. But price moves up, comes down, and then it wasn't until today, I believe, that was today, right? Yeah, today, that it actually tagged it and then bounced off. I believe I saw one member notice that. I think he said NVIDIA hit supply like at 283, and then it bounced very nicely. Let's just go further in and see how nicely that worked. So my 3-hour demand zone, this is a new one, by the way, because new day, remember. So this 3-hour zone was at 283.75. NVIDIA came down, sold off. It actually blasted through a couple of demand zones right here. I did not have them anymore because I cleared it to chart for tomorrow. But if, like, as you can see, price drops. Once it hits here, big volume, and then price is just held up by that. Like, it consistently makes higher lows right here, and never touches it again. So this, if you have basically if you have some nicely drawn out zones, like if you can identify those basing periods followed by those rallying periods to the upside or downside, these regions, these zones are some really good take profit zones. Or conversely, you can use this as a good entry. Let me see. Oh, I'm sorry. 2, let's see. I don't think I have a 2 here. Let's try a 1. Oh yeah, here we go. So this 1, I got it from this day. So the open is at 313.93, and then the highest point between both of these candles is going to be 316.69, and that's from the green candle. And also this is, I remember this day. Oh shit. I remember we had broken out of this wedge on this day. We had gotten about, I believe the price was 359. That's when I took calls to the long side. And I remember this day, I sold a good chunk of my calls when price hit around 310. And then I left some running into the aftermarket, like into the after hours. And it wasn't until, what was it, the following day in the pre-market when price was actually struggling. Oh shit, that looks kind of bad. 1 second. Yeah, price was struggling to keep a high here. Like it posted a high here, like at the open, like at 1 a.m. And then it just consistently made lower highs. And it wasn't until the open that this thing rejected pretty hard on this day. Let me see, 30 minutes. Yeah. This day, had you been watching the pre-market, had you had this 1 hour supply zone marked out, this would have been a good opportunity for you to short this thing or play puts to the downside, because this thing was just, once it touched it, like it just got in there and it just started making lower highs. That just shows weakness, and it pretty much just dropped right after tagging it in the morning. Let me see, I think there was a 90 minute. I may have skipped that. Let me just turn this off. Oh, another thing, guys. Extended hours. When I chart, I turn off my extended hours, and the reason for that is simply because during the after hours and the pre-market, there's not a lot of volume. So whatever candles that do form in those time periods, they are unreliable because those candle formations may be inflated due to, because it's a lot easier to manipulate price when there's low volume. So oftentimes the candles that you do find in the extended hours, they're not truly representative of what you would consider like real price action, which would be after the market open to the close. So that's an important thing to note, guys. Turn off your extended hours whenever you are trying to chart out these supply and demand zones, okay? What was I doing? A 90 minute? Oh yeah, I'm already here. I think there was one right here. Oh yeah. This 90 minute, was formed today. So this was after the fact that it bounced off demand off the 3 hour. Then it based, and then it rallied to the upside. So right now, like I said in this little drawing, you're only going to find the supply and demand zones only after the fact, only after this and this and this happen. And that's basically what happened here. So this drop, this base, and this rally, it's only after the fact of this price action that I was able to find this demand zone. Okay. Let me see. I think that should be it for now. Because that should basically be it. Like, let's just go to a random ticker. Let's try. Let's try something like Alibaba. Let's just, and this is just to show you how you can find, or like how I would go ahead and find these if I were doing this. Okay, so for Alibaba, big sell-off. Holy shit! Right here, like I can immediately spot a demand zone right here, and again, you want to look for a basing candle. Doesn't matter whether it's for demand or supply, you want to find a basing candle before a big move to the upside or the downside. So for this one, I'm just going to eyeball it. I'm just going to say that the start of this candle is going to be 113.8, and let's just do, and I usually like to label my zones as I go. Okay, so, and then the close, or the lowest point, will be the close of my demand zone. It'll be the low of this candle. And let's just see if we can find some supply. Again, I will go into detail in the next video as to what candles are good, what candles are bad. Because you can, like, after a while, you can definitely be flexible. Like, you don't have to follow, I guess, the basic rubric that I just gave you guys. You don't have to follow that religiously. You can be a little flexible when it comes to these zones. Okay. Let's try a 4. Nothing really. Let's try a 3. I see some up here, but or let's just draw them for just to show like an example. 3. And I got this 3 from this candle right here. And the close, remember, the highest wick between these two. Let's see. Same here. There's a 2 here, but it's a little small. But just know there's a 2 here. Let me see. 90 minute. Don't see anything there. 1. Oh, nice. This right here. So we can go ahead and put that right there, 1 hour, and then we can go ahead and put this rectangle right here. There's also some right here. Let me show you guys. This one's actually a little questionable, a little iffy, but I do like the price action to the upside. Actually, Alibaba wasn't that good of an example, but I hope you guys get the gist of it. Because basically what you guys just saw me do was just work my way from the top to the bottom. So we did find a good one, a daily demand right here. This one was really good. I like this one. There's daily supply here, and then you guys saw me work my way down from the 4. Didn't really find anything. 3. There was that one up here, and then you guys saw that might open for this. I'm sorry, that the start of this zone is at the open of that candle, followed by this large movement to the downside, and then the end is the highest wick between the both of them. And then for the 1 hour, same thing. Like, I just tried to find a basing candle followed by movement to the upside, which again, the start of this demand zone was at the open of this red candle, and then the lowest point between this area, which would be this right here, and then right here, supply, open of this green candle, followed by the highest point between both of these candles, or this little area. Again, if you guys do have any questions, because I have been doing this for, I don't know, like, I've been using this particular type of indicator for like 6 months now, so I am a little, I guess, I've seen things that work, some things that don't, and I know what works for me. So if you guys do have any questions about which candles, or like what formations look good, what formations look bad, just go ahead and ask away. But ideally, what you do want to have, this is the ideal formation. You want to have this candle right here, this basing candle with no wicks right here, followed by this big green rallying candle. Or in this case, you want to have, for supply, you want to have a big, not a big, but a small basing candle, followed by a big rallying candle. Also, what else was I gonna say? I think that covers the basics of it. So once again, let me just show you guys. Basing candle for demand, followed by big green candle for supply. Basing green candle followed by big red candle, and then these are like the two common for price formations that lead to these to the generation of these zones. You have a rally followed by a basing period, followed by another rally. You have a drop, a base, a rally. For supply, you have a drop, base, drop, and then for and then for supply again, you have a rally, base, drop. So for now, just try to focus on identifying like candles that look very similar to this structure for both supply and demand. Try to chart those out, try to practice, and then if you guys do have any questions, just send me screenshots and I'll let you know whether the zones that you have drawn out are good, whether they're iffy, and whether they could use some work. Also, I'm sorry, this is one take, by the way, guys. One thing that I forgot to go over was the validity. So let me go back. Let me see. Yeah, we'll just do it on this one. This is gonna be fairly quick. Yeah, here it was. So when to use, I'm sorry, not when to use, but how do you know whether these zones are valid or invalid? The way to determine that is whether you can determine whether price bounces off it or if it just slices through it. So when price bounces off it, like we saw in NVIDIA right over here, on a 3 hour, like once it dropped this morning and then it bounced, that tells me that this zone is valid. It's like if price were to meet this 3 hour one more time, I'm pretty sure, like, there's been like a lot of instances in the past where these zones oftentimes just push price in the opposite, in this direction, in the opposite direction that it's coming from. So let's go back to NQ. So this 2-hour zone was from yesterday, I believe, that I had drawn out in anticipation for today. And when price opened today, let's see if it, I think it did. Actually, let's look at the 1 minute. Okay, so today, as soon as we rejected this 2-hour and this daily demand, supply, price just came tumbling down, tagged this 2-hour, and then just sliced through it as if it really wasn't there. Like, this is a minute chart, but if you look at like a 5 or 15-minute chart, it's a lot clearer that this price just like almost ignored this thing. And like I said, let me go back to the 2-hour frame. What is this? All right here. So right here. So this is my start. Again, your basing candle followed by your rallying candle. The open, 16,436, and then the lowest point between these two candles, 16,373. Once this thing crossed this. This bottom price, the ending of this demand zone, puts were in play for me. So what happened is price just came into this demand zone and then sliced through it. The question that I often get is, when do I know whether these zones are still in play or not? You'll know that they're in play when price just comes, tags off it like this, bounces off, and then just continues like either moving sideways, goes up here, tags it again, or whatever. Like, as long as it's bouncing off it, it doesn't matter how deep it goes. As long as it doesn't cross the end of the zone, it's still in play for me. Once it crosses it, like say for example, like say price were to do this, and then once it crossed it, I would not use the zone as demand. This would become invalid. I would just remove this thing and just forget about it. There are some instances where where price may come back and like test this price right here, because oftentimes that may be like a low of day, that may be like support, resistance, whatever. That may be like a key level on the price chart. But as far as demand and supply zones go, I would simply not use this anymore as demand, because price has already sliced through it, as you can see right here. And then right here bounces, and then there is this wick that tags, like it tags this close. I'll show you where the heck is it? This basing candle right here. So the start is like around here, and then the close, the end of that zone is like around here. And today price did manage to peak right below it, but sometimes, and that's the thing, like I do say, like, once price crosses like the ending of these zones, they become invalid. But oftentimes, like I say, like I said here, like these will be key levels, like they'll be like the low of day, high of day, blah blah blah, whatever, and it'll bounce off, like it'll bounce hard off that price. So I guess, like, oftentimes, like, you'll come across zones that have wicks that look like this, and they'll just bounce completely off it. Or other times they may have wicks like this, and then the candles will start forming below it, and that zone will become invalid. So, but for now, just if you guys do have questions about that, just try to make sure that price does not cross the ends of your zones. If that is the case, they are still valid. Otherwise, if not, just consider them invalid. Because right now you guys just want to learn how to draw them, how to identify them, and potentially use them as like your entry or your exit. Okay, I think that may be it. So I think for this video, remember, one take. It was a little bit over the place and a little bit organized, but I think we got like the gist of it. We hammered the main points, which were like what are supply and demand zones, what types of formations lead to the generation of these zones, and also how to draw them based off basing and rallying candles, depending on whether you're looking for demand or supply. And also, we looked at some charts, we saw some examples, and like I said, these, like, the generation of these things is not, when you're trying to draw them out, it's not ironclad. You don't always have to follow like the ideal scenario, because in this game, like the stock market, not everything is you're not going to find like ideal situations all the time. You're not going to find ideal formations, so you can always be flexible, but I would recommend to start getting flexible once you've had like experience identifying supply and demand zones. But for now, I would just suggest you guys try to stick to, I guess, like the textbook, or like the ideal formation, before going off and finding out what's comfortable for you, and seeing what works for you. So again, like I said, this is a 2-part series. I will go ahead and explain how I would go about trading these zones. I will go ahead and answer questions that you guys have, and also be posting more examples, more charts. I'll have to dig through some old screenshots, but I have a lot of charts that I can show you guys. So again, if you guys have any questions, or if I missed anything that you guys are still curious upon, like on how to identify it, or like how to draw out these zones, go ahead and ask, and I'll try to answer those questions in the next video. So I think that'll be it, guys. I'll try to get the next video out in the next day or so, or by this weekend for sure. So again, just leave your questions, and thanks for tagging along.